Let's continue this retail focus. Let's bring in Scott Bauer, the CEO of Prosper Trading Academy. He's joining us to, well, do just that. Scott, welcome. We were just talking JWN.
Thanks,
welcome. Thank you. JWN, and a volatile day it's been for Nordstrom. I see you have your eye on a few retailers as well. Let's begin here with, well, it looks like L Brands to February 2018 levels and Kohl's to December of 2019 levels. Both bid in reaction to guidance boost, though.
Yeah, retail, which has been in the doldrums for so long, specifically since, early last year with COVID, has really made I don't want to say a shocking comeback, but a really strong comeback, Ben. And it really all comes to something, an economic report that you and I talk about all the time is the consumer confidence. How are they spending? And what we're seeing in a lot of these stocks is the digital growth, the digital spend. It has really catapulted and just increased enormously to really help these stocks out, like an LB and like a KSS. I look at L Brands here. Yeah, they raised their guidance. The call option activity today is off the charts. There's 45,000 options that have traded today. 42,000 of them are call options. In fact, there was a big spread that went down earlier today, the March 50-60 bull call spread. That was in L Brands. So, this thing is, like you said, it's at highs that we haven't seen in a couple of years, and pretty much the same with Kohl's. Again, digital sales really driving it. 4-to-1 call to put ratio today trading. However, with Kohl's just above here, around the 51 level or so, if you go back, quite a bit, there could be a ceiling of resistance there.
Yeah, Kohl's, since coming off that November low, they're down only 2 weeks, Scott. Let's talk Tapestry, ticker symbol TPR. They had earnings. EPS came in at $1.15 a share. This was on revenue of $1.69 billion. And, well, for the most part, talk to me about what you're seeing there, because last I looked, this stock was well received into new highs, much like what we were talking about on L Brands in terms of Kohl's as well. There you can see the earnings versus what came in versus estimates. And, well, they also posted new highs, very structurally in a very similar situation here, Scott.
Yes, and they also mentioned that it's the digital side, their e-commerce, side of the business, and huge uptick, huge increase in China sales. China getting back to online, back out there. So there is huge growth here. And actually, out of the three that we just talked about, L Brands, Kohl's, and Tapestry, technically, Tapestry looks like the one to me that certainly wants to break out from this level.
Okay, definitely something to keep an eye on there. Scott, sorry, I thought we lost you there for a second.
Nope.
Tapestry, we're talking L Brands, and Kohl's breaking out here today, something to keep an eye on, and certainly something to watch here in terms of this if it continues. Scott, let's move on here, though. Another big eye catcher today and attracting some attention is rates to the upside. We're seeing the yield curve on the move, steepening again. Talk to us about this sharp move higher. Should it be a concern for the broader base market? The Russell seems to be benefiting from it.
The Russell sure is. The Russell's also benefiting, bottom line, from a slow reopening and vaccination. So
true.
That's what we're seeing in the Russell. In terms of rates here, it could start putting some headwinds into the overall market, but it's certainly great for the banks. Investors have been so optimistic about economic growth, and with the banks now enjoying a bump up, really in the interest rate environment, which we haven't seen for so long, that allows them to increase lending, deal making, trading. So that is all very, very positive. This interest rate environment is very positive for these banks moving forward. And quite frankly, Ben, that's also on top of what we've seen over the last couple months with the reintroduction of bank stock buybacks and Janet Yellen, quite frankly. I think, Janet Yellen has been a boon for the bank stocks.
Yeah, possibly also a reflection of some of the better than expected economic data that we've been seeing here in the U.S. relative to internationally, globally for that matter. Talk to me a little bit, Scott, about, well, how we've been seeing again the Fed expected to keep the shorter end of the curve lower for longer as they've made it pretty clear. But what's happening here is it's the long end of the curve right now. So the steepening effect also benefits the banks, but also a reflection of expectations and some of the optimism and thoughts that at some point all of the stimulus is going to provide some inflation ultimately down the road somewhere.
Right, and that's why I think if you listen to pretty much central banks around the world, not just our Fed, but coming out of the UK, coming out of Australia, they're all talking about how first part of this year GDP is going to be pretty much flat, nothing to write home about. But it's the second half of this year that they really expect a growth, big growth, reopenings, vaccinations. So I think that, really ties in hand with the steepening of the yield curve here, that central banks, they want to keep providing this free money, basically, this free lending to get their economies started. And they're going to let inflation run hot all across the world. They're going to let inflation run hot. And deal with that problem if and when it comes.
Yeah, we heard from the Bank of England today. They do seem to be willing to let inflation run hot. Scott, they're also focused on jobs, and we had a pretty good number here this morning in terms of weekly jobless claims, back down below 800,000. I imagine a lot of attention on the monthly report tomorrow.
Oh, absolutely, for sure. I mean, we want to keep seeing it trend in the right direction. We're probably not going to see the unemployment rate really dip too much, but yeah, all focus is going to be on here to see post holidays, post 2020, what this projection could be maybe for the rest of the year here. So I'm not necessarily banking on the ultimate number, but what the projection, what the prognosis may be moving forward.
Okay, we'll keep our eye on the jobs report tomorrow, Scott, and appreciate you joining us here, taking a look here at, expectations here to come in terms of some of these individual stocks, the retail sector, the move up that we're seeing, and tying it back to some of the optimism across the board here. Ultimately, again, with the Fed dialed in on the jobs, we will be as well. Scott, it sounds like you are also. Ladies and gentlemen, Scott Bauer, thanks to you. Scott's the CEO of Prosper Trading Academy. We're going to take a quick break. When we come back, it's